Hi. Sorry, did I startle you? When you're used to hearing a certain type of commercial, something like this can, well, take you by surprise. That's kind of how it is with the Lexus RX, a vehicle that has continued to defy expectations for over 25 years. From the first luxury vehicle of its kind, to the first hybrid luxury vehicle, to the only plug-in hybrid worthy of the RX name. We understand you want more than the everyday SUV. And isn't being understood an amazing feeling? Experience amazing at your Lexus dealer.
Hey, Fidelity. How can I remember to invest every month?
With the Fidelity app, you can choose a schedule and set up recurring investments in stocks and ETFs.
Oh, that sounds easier than I thought.
You got this.
Yeah, I do. Now, where did I put my keys?
You will find them where you left them.
Investing involves risk, including risk of loss. Fidelity Brokerage Services, LLC, member NYSE, SIPC.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, everybody. This is the Larry Kudlow Show. By the way, you can get us on the internet, live streaming on the internet. LarryKudlowShow.com. LarryKudlowShow.com. You can hear it around the country, throughout the world, including the solar system and the Milky Way. Don't miss a thing. And during the week, please join us, Fox Business, fabulous Fox Business. The name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't get there at 4, well, just text your favorite 9-year-old, and she will show you how to DVR the show. It's not hard. Anyway, we got a lot to talk about in the stock market, which was roaring this week after the 50 basis point cut by Jay Powell and the Federal Reserve. We're bringing in David Bahnsen, Bahnsen Group's CEO. He's the founder and managing partner, author of the Dividend Cafe.com, and his latest book is Full-Time Work and the Meaning of Life. And my pal Jim LaCamp, Senior Vice President for Investments at Morgan Stanley. All right, gentlemen, this could be fun. Let's see. The Dow is up 670 points. The NASDAQ 264. The S&P 500 up 77 points, so it was a big week. Interestingly, after the 50 basis point cut, interest rates in the Treasury market went up a little bit, 8 to 10 basis points. Anyway, David Bahnsen, what do you make of this story? Did the Fed do the right thing, and what's the stock market impact?
Well, I think that the stock market has been pricing in the expectation of it for quite some time, and that's why a lot of this is so different than past rate-cutting cycles. For one thing, we're not in recession. You know, it's true that about half the time the Fed begins cutting rates, markets are not up a year later. And the reason is a lot of times when the Fed is cutting rates, it's real bad economic stuff going on. There's a mixed bag right now in the economy. I think everybody knows that. But here's the real story to me, Larry, and I am just mystified when no one's talking about it. They are quantitative tightening while they're cutting rates. Mm-hmm. It's the only time since the financial crisis and they introduced the second policy tool of bond buying, the only time that the two policy tools in their toolbox are working against each other. I don't believe that can last.
Yeah,
it doesn't make any sense.
It's an interesting point. Believe it or not, I read that in your Dividend Cafe. I do my best. I do my best. But that's an interesting point. In other words, to our listeners, in effect, the Fed is selling bonds out of their portfolio. That's their balance sheet, which continues to come down, which I personally think is a good thing. But it does contradict, as David Bahnsen said, the fact that they're trying to ease up on the interest rates. So, Jim LaCamp, why don't you react to that? Did the Fed do the right thing, number one? And number two, what about David's point that you have contradictory policy levers going on?
It's really an interesting time, and I think David makes a very, very good point. And that's not the only confrontation that the Fed is looking at. We're also looking still at a massive confrontation between monetary policy and fiscal policy. And I think one of the reasons this economy is not in recession, and this is the wrong answer, but one of the reasons is we've still got a lot of government money sloshing around in the economy, particularly for infrastructure-type projects. The bad news is that last $1 trillion in growth that we've seen has cost us $1.5 trillion. So I think if Kamala Harris gets elected, and for that matter, Donald Trump, he is no spendthrift. Let's be clear about that. Either one are probably going to turn on more of the federal spigots, and I think that's going to be a real challenge for the Federal Reserve Board to be stimulating the economy by lowering rates at the same time we've still got trillions of dollars of money printing seeping into the economy at the same time. And the big question for investors is very, very simple. Are we going for a hard landing or soft landing? Hard to David's point, soft landing, market averages a 17% return after the first rate cut. Hard landing, a 15% drop. And high yield spreads are not showing recession yet, but there are a lot of parts of this economy that are firing on about 3 cylinders.
Yeah, but just to react to the spendthrift point, Elon Musk is going to come in with a bunch of businessmen, if Trump wins, and take several $1 trillion out of the government.
I love that.
That's what
if they can pull that off.
It's an interesting.
I love the idea.
I'm not saying that this is going down the road, and first of all, we don't know who's going to win. I understand that. But I do think the Elon Musk connection, and I know it's a very real thing. I mean, I've talked to my former boss about it. He's going to give it his best shot. And he also wants to rescind, which needs congressional approval, but he would rescind the entire misnamed Inflation Reduction Act, which, Dave Bahnsen, that thing's now worth over $1 trillion of, Green New Deal climate change subsidies that had nothing to do with inflation. So it's a speculative point, but I just wanted to throw it in. And one other point. During the Trump years, spending as a share of GDP was only around 20%. In recent years with Biden-Harris, it's up to 24 to 25%. And I think, Dave Bahnsen, I don't want to have to defend every policy. In some sense, I'm responsible for some of the old policies, but they may trim a lot of fat from the government.
Larry, I don't mean to take the other side of it because I think you're right about some of the instincts, and a lot of it is going to come down to personnel. Mm-hmm. If Trump is reelected, I got to see who some of the people are he's going to bring back because personnel is policy.
Right.
But look, we can talk about Elon Musk and taking some fat out of government. We can talk about infrastructure, getting rid of the badly named Inflation Reduction Act. There's a lot of things going on. But if they don't involve in the discussion of entitlements, then they're not doing anything. Because that is the real cause of government spending is transfer payments. The additional 3.5% of spending of GDP in the last 4 years has all come in transfer payments, every bit of it.
Yeah, no, that's
the problem.
That's correct. No, those are the so-called smaller entitlements. But you're quite right. Well, look, we'll see. You're also right.
I think the bond market here is a very important part of this whole discussion. Whether it's Trump, whether it's Vice President Harris, whether the Fed is doing the right thing or not, you got a 10-year at 3.7%. Mm-hmm. That's the issue. Is that if people think inflation is going to be 2, 2.5, 1.5, it doesn't matter. They're predicting real GDP growth with a 1 in front of it. That's what we had in the Obama years post-financial crisis. You cannot keep this country going the way we believe in aspiration, prosperity, growth, opportunity with 1.5% real GDP growth. And the bond market is telling you we're going back to that very low real GDP. It's not good.
What do you think? Jim LaCamp?
Yeah, it always have. I mean, if you look at just read Rogoff and Reinhardt's book. If you look at the history, and Lacey Hunt writes about this a lot as well. If you look at the history of federal government spending as a percentage of GDP, once you cross about 125%, which we did going about 99 miles an hour, once you do that, you have chronically slow GDP growth. And when you get your paycheck right now, a lot of people don't realize, and you look at how much money was taken out for taxes, the biggest part of that now goes to interest expense. It doesn't get back into the economy. It doesn't build roads. It doesn't create jobs. It just goes to interest expense. And what you end up with, I don't want to call it turning Japanese. I don't want to channel the vapors, but it's what happened there. It's a good poster child for what happened. Now they had demographic problems, et cetera, that we don't have as much. But it doesn't matter. Once you spend that much money on interest expense, you're going to get a slower GDP. And not to mention all the boondoggles that we have seen with these government spending programs. They're not creating jobs. They're not creating even clean air. They're not lowering inflation. Yeah, you have great names like the Inflation Reduction Act, but none of them achieve their stated goals.
Dave Bahnsen, your point.
Jobs is exporting LNG. That's the thing that kills me is the stuff they're doing isn't creating jobs, and the stuff that was creating jobs they stopped doing. Keystone, export LNG. This is the thing that your former boss, Larry, doesn't get enough credit for. And I'm critical of certain things. But I'm telling you, energy policy is his most underrated achievement in those 4 years.
Yes.
And I can't believe that the Biden administration has not taken more criticism. I saw the Chevron CEO this week just hammering them about this delay in approval on export LNG. It's just crazy what it is doing for lost opportunity and job growth.
Who is that? That was Mike Wirth?
Yes,
yeah,
Mike Wirth.
He's a very smart guy. I know him well.
And energy prices are turning up, and they're going to have a bigger problem with inflation than they think if they continue with these energy policies.
I just wanted to sneak in to Dave Bahnsen's point on the longer-term growth outlook. I'm looking at my sheets, David. The 10-year real yield on the tips is 1.59%. And that's a proxy for, you could say, capital formation or investment, but it's a proxy for the GDP. And it's a 1.59. You know who talks about that a lot is Art Laffer. He follows that very, very closely. If you go back into, the tips started in 1997. But if you go back and look at the history of those things, they can get to 3% plus and have been at 3% plus, but not for many years. Not for many years. And at 1.59%, you're right. The bond market is predicting very slow growth, and the bond market is predicting very low inflation. The 10-year tips break-evens are 2.15%. So that's a rather unimpressive economy. So I agree with that point. And I also agree with the energy point, 100%. You're down there in Texas, Jim LaCamp. What are they doing?
Oh, my gosh. Have I got something for you?
We should be at 16, 17 million barrels a day, and we're still at 13.
I've got a really whacked out story to tell you. I was sitting with several oil guys, Permian Basin guys, all of them conservatives, and having a beer, and they were all saying that, and making a joke out of it, that if they were going to bet their pocketbook, they would vote for Kamala Harris because then they know energy prices would be driven substantially higher,
sky high,
and it would help their pocketbook. Now, none of them are actually going to do that, but they were all making that joke that if that's the way they were going to vote, they'd vote for Kamala Harris.
But they won't drill.
Policy.
I mean, the rig count keeps going down. They're not They don't want to drill in that environment. They become capital money managers. That's what they
exactly
do,
right?
Yeah, I mean,
and
they'll make money.
They have a labor problem, too. They can't get people to come out there to work. So it's a real difficult proposition, and it's going to hit a hard wall at some point.
Well, look at Harris. Kamala Harris will shut down the spigots for for fossil fuels, and or Trump will open the spigots up. So you got to figure. I don't know what the right bet is right now. Dave Bahnsen.
You play the drillers. You play the drillers if Trump wins,
Wow.
and you play the E&P companies if Kamala wins.
You know what the worst performing sector was when President Trump was in office was energy, and you know what the best performing sector has been under Biden-Harris? It's energy.
Yeah.
But that means something different than people think.
Because prices were low.
The prices were low. The COVID thing, the starting point where Biden came in, all that matters. But if Harris is elected and they don't approve any new drilling, that kills small cap drillers. If President Trump comes in, you get small cap, you get entrepreneurs, you get wildcatters, you get development. Candidly, we're big holders of Chevron and Exxon. I don't think Chevron and Exxon hurt from a Harris at all because it crowds out competition.
Yep, E&P if she wins, drillers if he wins. Those are the plays.
All right, let's take a break. This is great stuff, both of you. Dave Bahnsen of the Bahnsen Group. Full-Time Work and the Meaning of Life is his book. It's a very important book on how important work is. By the way, Dave, I interviewed my very dear friend Wilbur Ross, who has a new book out, and it kind of charts his career. He's done fabulously well. He's a multi-billionaire and became Commerce Secretary, et cetera, et cetera. So in the interview, I said, what advice would you give to people who want to be successful in life and in business? You know what he said? His first word, work hard. First thing he said, work hard. What do you think of that?
Well, I love it, and he modeled it throughout his career. And you know what else he did besides work hard? He worked way into life. He didn't stop working at 53. He had $1 billion in his 50s. He kept working in his 60s and 70s.
Jeez,
I love it.
I know somebody else is still working late in life, but I'm not going to mention any names. But I will say we have to take a commercial break. David Bahnsen of the Bahnsen Group, Jim LaCamp of Morgan Stanley. Keep on working. I'm Kudlow. I'll be right back.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
Talking stocks with Dave Bahnsen of the Bahnsen Group. His book is Full-Time Work and the Meaning of Life. And Jim LaCamp, Senior VP Investments at Morgan Stanley. We went over on the first segment, so we just have about a minute and a half, 2 minutes. Dave Bahnsen, stock strategy right now?
Look, Larry, I cannot get behind the Mag 7 big tech trade at 48 times earnings. S&P right now, if you believe the most incredibly optimistic earnings growth of next year hitting 280, you're still at 21 times next year's earnings for index investors. This is the time to be rotating to value, to dividends, to more reasonably priced things. Consumer staples, utilities, they've had a big run the last couple months, but they're still pretty fairly valued. Energy, consumer staples, that's where you want to be. Get out of NVIDIA.
Yes, sir. Okay. Jim LaCamp, stock strategy right now?
I don't really disagree, although I think you can hold some of those names in the long run. NVIDIA is somewhat of a unicorn.
Give me a quick one.
Like energy.
Energy. All right, I got it. You're both wonderful. I appreciate it very much. David Bahnsen, the Bahnsen Group, Jim LaCamp, Morgan Stanley, terrific stuff. Folks, hang on a second, and we're going to do some money in politics with Liz Peek and Steve Moore. I'm Kudlow. I'll be right back.